The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello, hi, welcome to today's webinar on navigating Singapore's financial currents. This is Eric Lee speaking. I'm the sales director from Philip Nova. Before I begin, just a quick check to see if any of you can hear me, right? If you encounter any issue or you can't hear, not clear, please type down onto the question box. And in any case, during the course of the webinar, if you have any questions about the topic, about what Philip Nova offers, please feel free to type down to the question box and I'll answer them at the end of the webinar. Okay, just a quick disclaimer before I begin. Just take note that in today's webinar, you're going to see some slides, some examples. Just take note that these are for educational purposes only. A quick introduction on myself. I joined Philip in 2004, currently sales director with Philip Nova. Under Philip Capital, we have Philip Securities, which is mainly selling, servicing on clients who are investing in stocks, unit trusts. And for Philip Nova, we have futures forex. And also nowadays, Philip Nova, we are also introducing stocks trading into our platform. So I myself, I'm licensed with Philip for both stocks, equities, futures, and forex trading. For today's presentation, this is roughly a guideline on what we'll be going through. Starting off with some quick introduction about what this smart money that is all about. And then later on, we're going to run through some examples on how we can use this service to improve our trading on the Singapore stock market. Okay, let's just start with introduction. What is smart money? Who are the smart money then? The smart money, even though I call them smart money, right? It's just a term used generically. There are no one group of people who are hyper smart trading against the rest of the world. But they represent a group of professionals who more or less trades and invest for a living. So these could be people who are they are professional traders themselves, or for their institutions, hedge funds, mutual funds, fund managers, or some institutional traders from the banks. Right, so even though I group them as smart money, they really do not say group together, decide what to buy, what to sell. But through their own analysis in the market, through their own studies of the market, they will probably more or less come to a conclusion. And as more of them concluded to buy or to sell particular stocks, right, their actions will drive the share price, and their actions will cause the price of the share to rise or to fall to a certain extent. Of course, there are other factors involved. I'm just in a way simplifying it in this matter. So, but what is smart money flow really? You know, in this globalized world, investor rarely just trade on one localized market, especially for the smart money, especially for the institutional funds, the hedge funds, for the banks, right? They'll be moving money around the world, investing in where opportunities arises. And it's not just opportunities to make more money. Sometimes it's also the ease of flow of funds, right? It's just like how water flow, when there's blockages, the water will divert and flow to wherever there's openings, wherever there's ease of flow. So for institutional investment, these are very much some of the considerations. So it could be political, it could be some technological issues, or it could be just simply opportunities available in certain parts of the world, right? And they are moving of funds around because it's not just small amount, right? It's billions and trillions of dollars. So the moving of their funds will definitely leave trace, will definitely cause some to be some impacts to the stock market. And this is exactly what we are trying to do here by starting the smart money flow, is to be able to ride the wave and to follow on to invest in particular stocks or particular sectors where the opportunities arises. And what are the driving forces behind all these smart money trends? Why do they move their funds to this particular area, or this, be it geographically, or it could be just moving it to different sectors of the market? Sometimes it's economic forces, right? It could be due to fiscal policies, monetary policies by the governments. Of course, the best examples, or the most recent examples we all know of, is the increasing interest rate for the past 2 years by the Federal Reserve and also the central banks all over the world to fight inflation. The increase of interest rate will cause an impact to investment because it will increase the expenses that corporation faces when they need to finance their business expansion. So thereby, very commonly we'll see companies with a very bad balance sheet, company with high debt will tend to underperform during the high interest rate environment. And companies who are cash rich, companies who can generate cash easily, will find themselves in a better position. And also will find themselves be able to improve in the share performances. And that is the reason why some of these institutional funds will tend to flow into sectors or to stocks that will benefit due to all this fiscal and monetary policy. It could be geopolitical forces as well, right? Trade wars between the US and China may cause funds to avoid investing in the mainland China for fear of either going against the governments, ended up in the wrong side, or just simply do not want to be caught in the middle of a trade war. It could be fiscal wars, like what is happening in the Middle East and in Eastern Europe. So all this it may not be the only reason, but it could be part of the reason why the funds are being diverted. And it's not just diverting to avoid the conflicts. Sometimes it could be diverting because there's opportunities that arises due to the conflicts. Technological trends is what we are recently experiencing with the rise of AI. And we have seen this overperformance in a few stocks. We call them the Magnificent Seven, which is the technology stocks listed in the US. Leading the pack among them is NVIDIA, which has risen almost 100% from the start of the year. And of course, if you look beyond this year, the stock has probably rise probably 8 to 10-fold since 2020. And all because of the advances that he made in the AI technology. So prior to AI technology, we are also, the market probably talking about probably about 7 to 8 years back, the funds are flowing into the EV, electric vehicles. And prior to that, maybe 10 to 15 years back, most funds are flowing into the clean energy space. So different era will have different technological breakthroughs, whereby you will cause the institution funds to then shift their funds into investing in these various sectors, which will cause the stock to outperform the rest of the sectors. So this is exactly what we are trying to do here, right? Not by studying the technological trend, but by studying where the institutional funds, where the smart money are moving their funds into, right? For that, they will leave traces for us to find, and then we can make use of what the data we found and try to improve in our own investing. Okay, lastly, it could be just pure valuations, right? The stock could be doing something simple, but yet the company is trading at a very attractive valuation. So when the funds move into such, invest into such stocks, you will then cause the repricing of the valuation and the share price to go up. So what exactly is smart money analysis? Okay, how does it look like? Okay, this is an example here that I show. And in the charts that you're going to see for the rest of the webinar, whenever I show the chart on smart money analysis, it's going to look like this. You're going to see two lines, one in gray and one in blue. The gray line is the weekly price of the stock that I'm studying. The blue line will show the funds committed by the smart money into the stock. So if the blue line is coming down, it meant that the smart money are selling the stock. When the blue line is going up, it means that smart money is buying the stock, right? So as you can see the comparison between these two lines, the gray line and the blue line, you can see that it is quite correlated. Whenever the blue line goes up, the gray line goes up, okay? And not all the time, it's not going to be 100% correlation. If it is, then it's also quite useless to us. But sometimes what is most useful on this analysis is that firstly, it validates our analysis, right? When you want to buy a stock or you have already invested in a stock and you see that the blue line is going up, meaning that the smart money is buying, then you know that you're in the right track. You bought the right stock that the smart money is buying as well. What we do not want to see is that we buy a stock, but the smart money is selling, right? So, and another way to use this is also that when the share price is trading sideways, like what you see here during this period in April 2022 to November 2022, okay? This is the share price of Sembcorp Industry. During this period, Sembcorp Industry is trading in the range around $3, right? For the 6 months, the share price goes up, comes down, goes up again, doesn't move much. But within the same period, we see that the smart money have been accumulating on the Sembcorp shares, right? So therefore, that offered us an opportunities, right? When we found that somewhere in October, November period, we analyze and see that the smart money is buying, but the share price still remain relatively unchanged, offering us an opportunity to buy the stock before the price breaks up. Okay, so this is one opportunity. Another way to use this data set is our technical analysis method, meaning by applying technical analysis methods into these smart money data, analyzing this smart money data as if it is a stock. The positive thing about technical analysis is that it studies human psychology. It studies the supply and demand. When the demand is high and the supply is low, price goes up. So from there, you can study that there is higher demand going on. So when the blue line constantly breaks new high, every time the correction, it did not correct below the prior low, it means that this blue line is in an uptrend. Since we know that blue line represented the smart money buying or selling activities, so when the blue line is in an uptrend, we can then deduce that the smart money is buying. And the positive thing and advantages of doing that is the smart money are usually mid to long-term investors. They do not go in and out. Sometimes they do. Sometimes they do are smart money who are short-term traders. But by and large, most of the time, they are mid to long-term investors. So when a trend is established, a lot of time you can find that this trend will continue. So therefore, opportunity like what we've seen here in 2021, whereby the share price is flat, but smart money is buying, as well as this period here, 2022, whereby the share price is flat and smart money is buying, offer us an opportunity to buy into the stock before the breakout move. So this example here I show on Sembcorp Industry. It shows that the share price has risen from below $1 to almost $6 within 3.5 years. That's a six times returns over 3.5 years. Not too shabby for a Singapore stock, especially one that is not involved in any high-tech business ventures, right? Sembcorp Industry, as we all know, are into technology. Of course, now in hindsight, when we analyze and study the market, study the stock, we know that the rise of Sembcorp is partly because of the technology change, right? The AI revolution create opportunities for corporates to build data centers or AI data centers. And that requires tremendous energy. Therefore, not just Singapore, you find this theme recurring in many other countries across our causeway in Malaysia. You can check out this stock called YTL Power. It has also risen up 4 times last year and maybe about 20% since the start of this year. In the US as well, we have many other utility stock trending high due to the due to the demand for power, the demand for energy that is being perceived that data centers or the creation of AI technology will require. So what are some of the strategies that we can employ to invest in the Singapore market using this smart money data? Okay, just to recap our knowledge. Maybe this is something new to some of you, but for some people who are investing, this could be probably these 2 methods could be probably what you are using for your investment analysis, right? So there's this famous quote by the father of investment, Benjamin Graham. He's the teacher of the very famous Warren Buffett. He said, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. And his quote sort of encompasses both technical and fundamental analysis. What this means is that for technical analysis, the market is like when you use it, it's like a voting machine. And when it comes to vote, it's all based on emotion, especially in the West, in the US, right? This year is a US presidential election year. From, I think sometime, is it next week or next week? Trump and President Biden is going to have their first televised debate. Subsequently, you're going to see a lot more of such debates. You're going to see a lot of shouting match going on, a lot of very hype up emotions going towards the polling day. So, but this reflects right? Voting reflects a person's emotions. When it comes to the stock, it reflects investors or traders' emotions in terms of the investment, right? So, but for stocks, it's more simple. The emotions are only two: greed and fear, right? So thereby driving the prices up or driving the prices down. For fundamental analysis, is a weighing machine. In that sense, we are weighing the value of the stock. We are weighing the value of the company. And there are generally three basic methods that's used in fundamental analysis. And this will represent the different parts of the annual reports that investors usually look into. Discounted cash flow analysis, we look at the cash flow. Studying of the financial metrics like the PE ratio, we look at the income statement. And we study the asset of the company. We study the asset, the liability. So in that case, you are looking at the balance sheet. So by using this commonly found information, because every listed stock, they have to report their quarterly earnings, their annual earnings, quarterly or annually. So these are publicly available information to which investors like you and I can use to study the market to weigh whether the stock is considered overvalued or undervalued. So, and all these for technical analysis and fundamental analysis are being incorporated, being represented by this blue line here. Why do I say that? Because when the investor buy, be it just the smart money or investor like you and I, when we buy, after an analysis, whether we use technical or we use fundamental analysis, at the end of it, we come up with a decision, which is that the stock price will goes up, and then we buy the stock. As more and more investors buy into the stock, money is being poured into the stock, the share price will go up until it comes to a point whereby we meet a bigger seller, meaning there are another party who disagree with us and think that this share price is too high. The share will come down. And then they will start to sell, taking money out from the stock. So eventually the share price will move and come to an agreement due to the actions of the buyer and the seller. If there are more seller than buyer, if more funds are being pulled out from the stock than funds are then being added into the stock, then the share price will eventually fall due to the overwhelming selling activities. Right. The opposite end is true. When there are more buyers than seller, then the share price will go up as more and more funds are being added into the stock. Right? But we know that money, when it comes to the flow of funds, institutional funds definitely will have an edge, right? Because they have more backings towards them. The funds could be from sovereign wealth funds, from countries, from the governments, or the funds could be from corporates, from financial institutions who are looking to invest for a long term, right? So when the smart money make a decision to buy, their impact will definitely be more than when the retail investors like you and I make a decision to buy. So thereby, following them, watching what they do, will also give us an edge or to help to improve. And many times I like to use this analogy. Like when we want to travel from home to work, right? We've been driving this road for the past 10 years. We know so well how the road goes, around what time there'll be jams, which area there'll be jams, you know. But once in a while, right, accident happen or road works happens that we are unaware of. But one way we can, even though we are familiar with the route, one way we can improve our odds that we don't get stuck in the bad traffic is by using the maps, right? We use Google Maps or we use the maps from our phone, from our car, who will then alert us whenever there is a traffic jam and will show or divert us or will recommend an alternative route that is much faster. So using this smart money investment is the same, right? Even though we invest in this stock, we have been investing in the stock, we have studied the stock for the past 5 to 10 years. The stock is not new. What the company is doing is not new to us. But having this additional information is like having a map that tells us that, hey, there's a better flow in traffic, right? So the traffic today is not too good. It's coming down for this stock. So perhaps you want to divert to go into the other way. So that's how I will see the usage of this, which is to supplement my other analysis method. So how do we then identify potential stocks using this smart money method? I'm just going to run through some quick examples, real life examples that I've been using to advise my clients. Take, for example, Singtel. Okay, this is a smart money chart on Singtel from quite recent, from last year until end of 2023 until now. Similarly, you can see that the blue line is a smart money, the gray line is a Singtel price. Singtel is not a particular exciting stock, right? For many years, the share price ranges around 220 to 260 and down and up again, right? But once in a while, we can see that there are some actions going on by the smart money on the stock itself. Take, for example, during mid-March, we can see that the smart money started buying Singtel stock. Like I said, one way to do it is to use technical analysis on the blue line on the smart money chart. So as the price breaks up, it shows that the smart money has garnered enough substantial buying momentum. The share price reacted by going up. Subsequently, we see that the share price of Singtel fell down, right, from above 250 back to around 230 plus. Okay, but interestingly, you can see that even though the share price of Singtel fall back to nearly the low before the rise, but the smart money, the sell down by the smart money is much lesser as compared to the fall in the share price. Okay, this shows that there are still some commitment into the stock by the smart money. Okay, this is just a normal share price of Singtel. So during this period, those of you who know technical analysis, you can see that Singtel has been consolidating into a symmetrical triangle formation. It broke briefly, which is the period of time that we got a signal from the smart money chart, and the price fall back down again, hitting the lower end of the triangle before turning back up, and then it break up again, and now trading close to $2.60 something. Of course, now looking back, when we read the news, we realize what happened. This is a news article by Straits Times on the 18th of June. Remember, we got a signal from the smart money sometime in mid-March. So only 3 months later, on the 18th of June, then there's an announcement that Singtel and KKR consortium to invest 1.75 billion in data center, they're basically just going to build a data center in Malaysia, right? So there is a reason to excite the market. As I said, Singtel is a boring stock, utility, telecom, not much growth, right? In fact, a lot of competition. So this new venture that they are going into, right, shows that the company is diverting their attention, and perhaps this could be a next business opportunity they will make the company back into growth again, right? Therefore, the rise in the share price. So smart money knew that probably sometime mid-March, right? And that's why they started buying. But the news, if you only invest when we read the news, we only realize this 3 months later, which is sometime around now. Of course, I'm not saying that the share price has ended the move, it's going to come back down, right? If this really proved to be a valid business venture, then I'm sure it's going to have a positive impact into the price of Singtel. So we shall see if smart money continues the buying. If they do, and the opportunity arise, perhaps Singtel is a stock that we can pay attention to again. Okay, this is another small cap stock in Singapore. Samudera Shipping is a only container shipping stock in Singapore, right? So the blue line shows smart money action, which since my tracking of the stock, smart money has been selling, right, since early 2023 until March 2024. So for almost the past 1 year, smart money have been selling, and the share price have been falling. Okay, but sometime during around the end of March to the end of April, we see that the smart money started buying the stock. And that time, Samudera Shipping is trading at around 70 cents. And then subsequently, another breakup in the end of April, and Samudera trading close to 80 cents. Right? Today, Samudera is trading close to $1, 90 over cents to $1. Share price wise, we can also see that price of Samudera has been trading sideways since the start of this year in January until sometimes in the end of March. In fact, on the 1st of April, we have the first breakout with significant volume. And then subsequently, we have another breakout, right, which is sometime towards the end of April. So both times, the share price is as what I've indicated. The share or price of Samudera is trading around 70 cents to 80 cents. So since the first breakout to the high that it has clocked, the price of Samudera has moved up about 50% from April until June. So that's about a 2 months time frame for 50% move on a penny stock. And what's the reason? Of course, on this report on the 30th of May, CNA reported that due to shipping delays, higher freight rates, ports in Asia, including Singapore, see heavy congestion. So as I mentioned, Samudera Shipping is into container shipping, right? So a rise in freight rates benefits the company. Of course, the users or the companies or people depending on the goods will suffer because there may be some delay and they will have to end up paying a little bit more due to the rise in freight rates. But if you are an investor of Samudera or any other shipping stock, this will be a good news to you, right? So the market only learned of this when we read the news on 30th of May. But as I mentioned, the smart money already started buying sometime in late March, right? So this is one of the benefit of investing or rather using the smart money data as one of the tools to help to invest, because their actions are usually much more advanced than when we then much later on, then we will start reading up on the reason why on the news or on the magazines or on the TV. Okay, another stock, Top Glove. Okay, Top Glove is listed in both Malaysia and Singapore. Top Glove is into glove rubber glove manufacturing. About maybe mid of 2020, or rather early 2020, when the COVID first broke out. For those of you who are investing in Singapore or even Malaysian shares, you will know that this is one of the hot stock then, and not just Top Glove, many other glove manufacturers, because at that time, the whole world is in need of medical glove, right? You read at that time probably on the news, and watch it on the internet, saying that in a lot of countries, the medical practitioner are running out of the PPE, the personal protection equipment, to which glove is one of it. So thereby, the share price spiked up a lot. The company started making huge amount of money because for the same glove that they manufactured a month ago or 3 months ago, prior to the COVID period, right? They are able to then sell the same gloves at triple or even 5 times the price. The reason being, there's a huge demand all over the world for this product. And of course, once other markets or other economies realize that there's a huge amount of money to be made by making gloves, then other companies retune their factories to start making gloves again. So especially during that period of time, whereby China, the COVID was not affecting China as badly as it's affecting the economies on the rest of the world. So China turned on its manufacturing power and started manufacturing a lot of gloves, thereby driving down the price of gloves a lot. So due to the huge spike in the share price, due to the huge spike in its valuation, a lot of gloves manufacturers subsequently see that their share price fell down by a lot. So to which Top Glove is one of it. So since it spiked in 2020, the share price has been coming down only until recently. Then we see that, hey, there's some action in the share price again, and the price of Top Glove and some other glove stocks went up. So sometimes in midday, smart money started buying. So this is just a price chart on the Top Glove, showing that the breakout happening. The breakout of the price happened on the 29th of April. Not particularly huge volume, but the share price subsequently started edging up until it finally broke up. So within a month, it made a 45% move. So what happened? What causes the price of Top Gloves to go up so much? Because now, when we read the news, we will know it, right? On May the 10th, Reuters reported that President Biden put tariffs on China medical supplies, to which the gloves, rubber gloves, the medical gloves, is one of the product. So this then give an edge to the other countries who are making gloves. So to which Malaysia is a big part, Thailand as well. But I did not really study the Thailand stock, so I'm not too aware. But I know that there are quite a number of Malaysian rubber glove stocks that are doing pretty well the last couple of months, especially during this period when this news break, right? But we learned that sometime in mid-April, smart money already started buying. So for some reason, right, either they sniff out, they realize through the analysis, through the context, all these examples I show here, that they realize that there is opportunity to be made, and they started making the first move quietly, but their actions, right, of buying the stock leave trace. to which then this is what we can see and study through the smart money analysis. So of course now, recently on the 18th of June, we saw this news that the Edge Malaysia says that Top Glove is still a buy by this RBH investment banking and analyst from this group. RBH Bank says that the losses is narrowing, sentiments are improving, and the stock is still a buy. But the share price of Top Gloves has been falling since, right? So I'm not saying that the share price of Top Gloves will continue falling, right? I'm not sure, at least not as of now. As of now, I do see that there are some selling, a little bit of selling by the smart money, not too significant compared to the amount that they have bought up to, right? So if the share price of Top Gloves falls further, but we see that the smart money did not fall as much, or smart money started buying, then that may then give us opportunity to re-enter into Top Glove again. But as of now, we should not just follow this article and straight away start buying, right? So, I mean, my take is to wait and see. Okay, wait and see, because as I said, smart money has sell a little bit. It's been selling a bit, not much, but nevertheless, they are selling. Okay, next example, Dynamac. Dynamac is a small cap listed in Singapore, dealing in the oil and gas sector. So when we study into stock like Dynamac, which into oil and gas sector, the price of oil is a very much factor that we want to pay attention to. Okay, so this is another way of analyzing the smart money analysis. As I said, using technical analysis, applying methods of technical analysis onto the smart money data. So we drew a trend line down, linking the high points, the previous two high points that he has made during the sell down. So from July last year, smart money has been selling. The share price of Dynamac has been falling from the high of 40 cents to a low of 23 cents. Then sometimes towards early March, smart money started buying, such that it breaks the trend line of the downtrend. Okay, so thereby this point here marks the change in trend, the change in direction of the smart money. And ever since then, we see that the smart money has been buying this stock, even as of now. So remember I mentioned about the divergence in the smart money and the share price. So we see such an opportunity on this Dynamac the past couple of weeks, whereby the share price of Dynamac have been falling since it hit a high of around 40 cents. But even though the share price has been falling, we see that the smart money had generally been buying. So this divergence will offer us the investor opportunity. How does the share price look? Okay, so sometimes in the mid of April, if you use Bollinger Band, there's a squeeze and break up to the upside. It hit the trend line, consolidated for a couple 1 to 1.5 weeks before breakout and breaks above the trend line, right? So buying at this point, close to 30 cents or 31 cents, offers opportunity of a 10-cent move. A 10-cent move on the 30-cent stock is almost 33% upside. As I mentioned just now, there was a correction in the Dynamac share price. but the smart money chart showing that the smart money have been buying. So since last week, we see that there's a jump in share price, more or less going back in track into what the smart money have been doing on the stock. Of course, there is a reason why the stock moved this way. As I mentioned, when we trade a stock such as Dynamek, most of the times we have to pay attention to the price of crude oil, which will then impact the way the share price move. So during last year, July to February this year, the price of crude oil has been falling. Therefore, we see that the price of Dynamek has been falling as well. Right? Then since mid-April, we see that the price of Dynamek has been going up, but even way before then, right, in late December last year, the price of crude oil has stabilized and it has gone up. So on the 5th of April, crude oil hit a high and then it started falling. And subsequently, about 2 weeks later, the price of Dynamek hit a high as well and started falling. Right, but as I mentioned, I show on the smart money chart just now, the smart money somehow did not follow through, right? They did not sell. For some reason, we do not know why, but the analysis shows that they have maintained their buy position into this stock. Then subsequently, of course, we see that the price of oil spiked back up, not back up to April's high, but definitely higher than it was 1 month ago. So thereby, the price of Dynamek reacted as well, and then it's now trading close to 40 cents. So what are the news that drives this move in the oil price and move in Dynamek? Okay, we all know that these conflicts going on in the Middle East. And so when these conflicts, if these conflicts were to worsen, right, World Bank warns on this article released on the 25th of April that oil price could exceed 100 barrels. So in a way, buying crude oil or buying stock related to crude oil such as Dynamek is a hedge against the oil price going up, right? Because if the oil price goes up, if the oil price goes too high, it will definitely affect the economy of a lot of stocks, because everyone is dependent on this crude oil for energy or for transportation. So if the price goes too high, it is going to eat into a lot of companies' balance sheet or income. So investing into oil-related stocks is thereby a hedge against, in case that were to happen, at least you will have a stock that will benefit, get to benefit due to the rise in oil price. So with the ongoing conflict, oil price will likely remain high. So perhaps there's a reason why the smart money is continuing its investment into Dynamek. So again here, another news, oil price rise as the supply-demand balance expected to tighten in the third quarter of this year. So this news is by CNBC on the 12th of June. So of course, it's during an interview that they're done with this analyst here. Right? But if we expect the oil price to go up, does it mean that all the oil stock is worth investing into? Apparently not, because in Singapore, there's still there are another 2 more energy-related stock that we see that the smart money are not buying. So first is Rex International, right? During the same period of time, the smart money had been selling Rex International, even though it's in the oil and gas industry. where it should benefit from the move in oil price, but for some reason it is not. So the smart money is selling, the share price has been falling. So we see that this price comparison between REX and crude oil, that it is not, unlike what we see in Dynamex, it is not very correlated to crude oil movement. The next oil-related stock is RH. So it's a spelling mistake here. RH Petrogas. During the same period as well, we see that the smart money has been selling the stock and the share price has been falling. So even though these three stocks, Dynamex, REX, and RH, are all related to crude oil, but they have different performances. So again here, not much of a correlation, or rather they are correlated during the downtrend, right? But when the crude oil prices goes up, the share price did not goes up as much. And this period of time, we see a divergence. Crude oil price jumps up, but the share price continues to drop. Okay, so lastly, before I end, just want to share some up and coming stock that I think worth pay attention to, and this is ThaiBev. This is a weekly chart of ThaiBev. You can see from technical analysis that the price wasn't doing very well since 2021, right? Partly due to COVID, because the country had been locked down, it only maybe the last 6 months to 1 year that it gradually opened up and now have more tourists going back. But even then, I think they have not reached back the pre-pandemic high in terms of the tourist arrivals number. But they are in the right track, and eventually they're going to see that, right? So, and to which I think stock may benefit. So what's the smart money doing? So from the smart money chart, since early last year, smart money has been selling the stock. The share price has been coming down. But sometime in the middle of February this year, we see a divergence. We see that the smart money started buying the stock, even though the share price remains low. It's been range bound, trading between 50 cents to maybe around 45 cents in the range. But smart money had been gradually buying since February until now. So why the fall in share price recently is due to this reason. The news that was just announced, reported on the 14th of June, that Vietnam plans to raise a special consumption tax on alcoholic drinks by 200% by 2030. So now we are in 2024. Now their alcohol consumption tax is about 65%. So they're going to raise it gradually to 100%. So it's not one shot like tomorrow, they're going to raise it to 100%, but gradually. So this impact to the price of ThaiBev is not going to be immediate. And in fact, if we check on the percentage of sales that ThaiBev get from Vietnam, it's only 21%. Most of it, 72%, is still from Thailand, right? So the company is still going to benefit tremendously when the tourists start coming back, when the Thai economy start to do well again, and there'll be some impact here from the Vietnam side, but not so soon, right? And even then, it's a smaller percentage as compared to what is gaining from its Thailand business. So in a way, could the market be overreacting? Maybe, right? But at least as of now, what we see is that the share price is trading close to the low of the range, but the smart money is still remain in the buy, still seems to remain in the buying trend, buy up trend. So we shall see if the smart money started buying again and the share price is low. This could then give us an opportunity to invest into ThaiBev. Okay, I come to the close of today's webinar sharing about this smart money analysis. So if you are interested to gain access to this data, I send out this weekly report, smart money report on a weekly basis to my clients. So if you're interested to receive this report, you can simply open an account by scanning this QR code. And then once your account is activated, for the next 12 months, you will receive this report free of charge. Of course, after the 12 months, then depending on the promotion going on, we can discuss further, right? So this 12 months is for you to test out this report to see if you can make use of it to help you to improve in your investing of Singapore stocks. So apart from this report, these are my other services that I provide. On a monthly basis, from now until the end of the year, I'll be holding a monthly Zoom meeting with all my clients. And the next meeting is coming up on the 27th of June, 2 days later. So on the last Thursday of every month, I'll hold this Zoom meeting. And using this platform to share with my clients on examples on how to use the Smart Money Report, as well as to share on recent market developments and how we can use such developments together with the Smart Money Report to plan our investing. So apart from that, I also provide some WhatsApp services, WhatsApp alert services, and these are some of the services that I provide for clients who sign up for that. So trading stocks with Phillip Nova, these are the advantages that you can find. There are no platform fees, no custody fees. You can use the platform. You can have account service by experienced stockbrokers such as myself. As mentioned, I've been around since 2004, so I have over 20 years of experience. And we also have technical and dealing team support 24/5. So, and beyond just stocks itself, if you're interested to trade other products such as futures and currencies, commodities, you can also do so using this platform. And another advantage of using Phillip Nova is the low commission we charge when it comes to stock trading. The Singapore examples I've shown here, if you use Nova to trade, the commission is 0.08% per trade, and there's no minimum charge. If you're interested to trade the other markets, such as Hong Kong, Malaysia, or US, you can find the charges shown here as well. Another promotion here to help you in your investing journey is that from now until the end of the year, we're going to have this promotion on trading on Nikkei 225 futures. If you want to learn more about this, you can scan the QR code, which will bring you to the terms and condition page. So basically, the more you trade, the more chances you get to win a pair of air tickets to Japan. And these tickets, this pair of tickets will be given out every month, starting from June. And not only that, right, this is a new piece of analysis that I'm working on. I'll probably be I'm close to completing my analysis. So this is just a sneak peek for those of you here. This is the first time I'm showing this to anyone. So on this chart is a smart money chart, but not on stock, but it's a smart money chart on the Nikkei index. So similarly, you will see that the gray line here is the price of Nikkei. The blue line here is the smart money's action on Nikkei itself, right? So what is interesting that I noted here is that the smart money tends to give an early signal, right? Meaning that it tends to peak before the index peak. It tends to bottom before the index bottoms. Again, over here, we see that it peaks before the index peak, right? Thereby, this divergence and this early signal could be can give us an opportunity to perhaps ready ourselves before a significant move in this Nikkei 225 index. So once I completed this analysis, I will also be sharing this on the weekly report that I send to my clients. So if you're interested to receive this report, you're interested to trade Singapore stocks, you're interested to trade this Nikkei 225, to stand a chance to win a pair of tickets to Japan, as well as to enjoy the lower commission rate during this period of time, please feel free to contact me. Okay, this is my contact details here. You can scan this QR code. If you are keen to find out more information, you can scan this QR code and arrange a one-to-one coaching session with me. Okay, now to Q&A. If you got any questions, you can just type into the question box and I will try to answer them to the best of my ability. Okay, there's a question here from Motley. Do you expect more than 20% correction in US this year due to fast deterioration in economic statistics like unemployment, retail sales? In the past, smart money outlook from crypto market preceded US stock market correction, which is look like happening now. This is nothing to do with today's topic, but this is my view here when it comes to the US market. Okay, I personally think that US market is still going to remain bullish from now, at least until mid or the third quarter of 2025. Of course, in a way, it has performed this year in a way the S&P has performed higher or better than my expectation. But nevertheless, I do not see any immediate danger, right, to the US in terms of seeing it falling more than 20%. Are we going to get some correction? Most likely, yes, right? Usually during this period of time, in the middle of the year, during the Q3, the market probably will soften a bit because statistically, US tends to rise during the year end, during the last quarter. Some say could be partly due to window dressing, or some say could be due to year-end holiday seasons. For whatever reason, this is the statistic that we notice tends to happen. And furthermore, like I said, this year we're going to have the US presidential election. So similarly, cycle-wise, president election is usually bullish year for the US. So as of now, economic statistic-wise, still looking quite okay, right? Maybe there's a slight downturn, but that is exactly, I think, what the Fed want to see, right? If the economics data deteriorate too much, they may then reduce the interest rate, which may then also cause give a boost to the stock market. Okay, next question is smart money proprietary indicator. Can it be used for US stocks? Yes, it is proprietary. Currently, I have smart money data on the Singapore and on Malaysian shares. Do not have any on the US stocks yet. Okay, there's no subscription fee. Another question is there a subscription fee to use it in your trading platform? Okay, there's no subscription fee for this smart money data. There's no subscription fee for our platform. And this smart money data, I created and I compiled it myself. So I shared it to my client on a weekly report that I sent out, which is a PDF report. So it is not incorporated into our trading platform. Okay, next question is that I currently have a Poems account. Does it mean that I need to open a new account under Nova? Yes, Poems and Nova are two separate platforms, two separate companies. So if you would like to receive this smart money report and you like the service that we provide here at Phillip Nova or I provide here, then you will need to open a new account under Nova. Next question is your coaching free? Is there a demo account I can try? Yes, the coaching is free, right? The demo account, we have demo account for our Nova platform and for the MT5 if you're interested to trade Forex. Yeah. Okay, looks like I've gone through all the questions. Is there any more questions that you have? If not, thank you for your time. Thank you for being such a wonderful audience and for the questions that you asked. If you have any more questions that I did not answer today, feel free to write to me. Okay. You can scan the QR code here or take a picture, right? If you're interested to apply for a Nova demo account or you want to open a trading account with me, you can scan this QR code and it will bring you to the respective web pages to do the subscription. Okay, thank you for your time. So I will hope to see you again. Goodbye.